So the oil prices have been going down, and that is one of the main reasons we have seen the recent U.S. dollar rallies. Today, in particular, the U.S. dollar rallies have been backed up by the prep of the market for the Fed rate hike. So going back to the U.S. economy's health, the IMF has said that this GDP, the disappointing GDP index, is temporary because of the solid labor market, accommodative financial conditions, and cheaper oil. Although that ultimately did not stop the IMF from downgrading the growth forecast for the U.S. from 3.1% to 2.5%. This is an expansion, and it's still an expansion, right? So an expansion is almost always better than contraction, in my book. I don't know where you stand with it. So basically, what I'm trying to say is that despite the bad GDP, we're still having a U.S. growth. So it's kind of a contradiction, but still better than nothing. Next, when you're next in line, and next topic to focus when you're analyzing a country's economic health is, you can say that for me? Yes, it's employment. So the latest job report from the U.S. shows that non-farm payrolls was better than expected at 280,000. That was a lot better than the previous number, which was 221,000. Average hourly earnings also increased by 0.3%. I'm looking at it right now. And that was an improvement over the previous 0.1%. The only downer here was the jobless rate, which actually ticked upwards to 5.5% from 5.4%. All right. So although the labor force participation rate remained at 62.9%, and the civilian labor force increased by 397,000 in May. We had that downer over there. So it's still somewhat healthy, given the fact that the economy wasn't able to quickly absorb the labor force increase. So this is not a trend yet, but it just could be a fluke, right? Okay. Seems like we're having some problems from some of our attendees. Hold on 1 second. All right, so the problem seems to be solved. Next in focus for our overall U.S. economy's health review is consumer spending. So the advanced monthly reading for both headline and core retail sales were better than expected at 1.2% and 1% respectively. So, and the University of Michigan Prelim Consumer Survey results for June were also very optimistic. So these were all good news for the US dollar. We have Mohammed here asking a question. Sure. So consumer sentiment was 94.6 if you want to write it down. Current economic conditions was at 106.8 versus 100.8 previous. So this is also better than before. Consumer expectations was at 86.8 versus last previous times 84.2. And new home sales for April also increased to 517,000, while the previous reading was slightly revised upward from 481,000 to 484,000. Still an uptick. overall consumer sentiment and consumer spending are pretty solid as well. This could also be because of the start of the summer and people moving and buying new houses and furnishing their houses. That is actually myself included. So this has been better than before, also good for the economy. Next in line is inflation. Moving forward, the core PCE price index for May remained flat at 0.1% for the fourth consecutive month. US CPI data for May will be coming out this week, but the month-on-month headline and core CPI reading for April were at odds with each other since the core CPI increased to 0.3% versus the 0.2% of the previous time, while headline CPI went down to 0.1% versus the 0.2% our previous reading. And then on a yearly basis, on an annualized basis, the headline CPI was actually down to minus 0.2%, while core CPI remained unchanged. It has been solid at 1.8%, but we do have an upbeat inflation report, and that is the headline and core PPI readings for May that were very optimistic, with the headline PPI increasing by 0.5% comparing to the previous minus 0.4%, and the core PPI increasing by 0.1% versus the minus 0.2% increase of previous time. So again, we've been having somewhat of an upbeat inflation. So just for a quick summary of our U.S. economy overview, overall, Q1 2015, the U.S. GDP did not contract but expected to be temporary. The labor market is pretty solid, and this in turn tends to bring solid consumer sentiment and consumer spending. Poor personal spending for April caused some concern, but retail sales data for May managed to offset this one. And while U.S. consumers may be pretty optimistic, U.S. business, especially those in the export-driven business relying on domestic demand, such as the housing sector, are doing pretty well. So as for inflation that we just covered, they're not exactly stellar, not really dismal. But that also means that the Fed doesn't really have a reason to raise interest rates based on inflation data alone, okay? Because as I pointed out yesterday in our Investivo article, we have two kind of people, two kind of analysts, people who are saying that inflation is not basically tolerate an interest rate hike, and on the other side we have the people who are saying that the U.S. economy is doing well enough and can definitely tolerate an interest rate. To conclude, this looks like the IMF opinion that the Fed should wait to hike rates, and this could be actually more reasonable given the currency, given the available data right now. Low inflation, for one, doesn't really support a rate hike just yet. While employment is pretty solid for now, there is a possibility that it could deteriorate over time due to a weakening manufacturing sector. Of course, this doesn't take into account any future optimistic surprises, so the picture is still not clear, and we'll just have to sit and wait another 15 minutes for the Fed to start their press conference. We're not going to be able to listen to them live because we're going to be in this webinar, but we could definitely take a look at the market and the market sentiment while the announcement's coming out and basically get an idea of what's going to be coming up. So bear with me. In other news, so we were talking about Greece and everything that is going on over there, but I also wanted to take a moment and talk about the UK. David Cameron only vote on rules surrounding the Euro referendum because Labour voters were basically saying that in a UK City AM paper, they were calling into question the PM's grip on this party after he backtracked on statements that ministers that do not hold the party line over the referendum would be sacked off the business. Another interesting story in the press during the London session this morning came from Bloomberg, and they were actually talking about the Chinese bubble, that the China bubble is going to burst. So the debate is now when and not if. The article quoted Bocom International, who have analyzed global asset bubbles of the last 800 years. I don't know how they did it. And he said that based on this analysis, China could go to the wall within 6 months. Again, I question how they did 8 centuries of analysis. It's just, I don't know. I just don't quote me for this one. But do concur that this is only a matter of time for Chinese stock market. China wants to play a bigger role in global finances, and they are hoping that their currency will become a global reserve currency, and that will give, that's going to be actually good news for Forex traders who could trade the Chinese currency on the charts. But a better Chinese economy, the reason why I'm talking about it is because it definitely does affect the global markets, and especially the Australian dollar, because the better the Chinese market does, the better the Australian dollar does. Okay, so I think we did cover most of the headlines today, and as I said, we're still waiting for the FOMC to rock the market. Next, I do want to do a quick introduction for those of you who have joined us for the first time. It's a little bit too late, but please do grab a pen and paper to take notes during our webinar. This is a live webinar. Definitely do ask questions. Melissa is asking, did I set this up correctly? I'm not sure what you mean. Can you hear me? Can you see can you see the screen, Melissa? I really don't know what you meant by your question. Yeah, do let me know. So let me just take a time and introduce you to the Orbex's Trader Library if you're not already a part of it. Orbex Trader Library offers videos, ebooks, infographics, trading tips, and analysis for all of you signed up. The videos are actually conducted by myself twice a week on Tuesdays and Thursdays. There is trading analysis by Trading Central and so forth that can definitely help you with your market trading decisions. As for myself, the reason why you're here and the reason why I am conducting this webinar is because I simply really do enjoy passing along the wisdom. Originally, I was an electrical engineer, started currency trading when I was in college in Tokyo, Japan, and I became passionate about it as I was making a lot of money. And I made a decision to leave my career as an electrical engineer and come to New York and diversify and basically move into the financial world with New York as known as the center of finance, at least for now. Chicago seems to be the next one. But I made the change. I came over here and I have been in the Forex market since 2008. I have published a book, Invest Diva's Guide to Making Money in Forex. Is available on Amazon or on investdiva.com. We have the whole book available also in videos. If you go to investiva.com, we are right now running a Father's Day special with 30% off all our services. That includes one-on-one webinars and the education, the video education course, which also provides you with the online version of my book. So that's it for me. If you do go to investiva.com, please do enter the code DAD. That's DAD. I know it's not Father's Day in a lot of countries, but it is going to be Father's Day this Saturday here in the US. So for those of you celebrating, this can give you the incentive to trade, make money, and buy your dad that gift that will basically blow him away by using the money that you earned trading Forex. All right. So again, for those of you, I do see some new faces over here. Okay, it seems like okay, we have a lot of issues with our audio. Okay, can you please type Y for a yes if you can hear me now? Can anybody hear me right now? Abe, Melissa, can you please verify that you can hear me right now? You can't hear anything, then one, two, three. I'm checking the microphone. Please type in a Y for yes if you can hear me. No. Okay, that has been a problem.
The broadcast is now starting. All attendees are in listen-only mode.
Can everyone hear me now? Oh, okay. We did have a minor problem over here. I do definitely apologize because we covered a major part of the webinar while a lot of you couldn't hear me. Well, that is a shame. I'm going to just quickly recap because I did go over today's market updates. We are awaiting the FOMC rate hike. It's going to happen in about 15 minutes, I assume. I did cover the current U.S. economy health, and I'm just going to tell you the summary, and that was that the Q1 GDP did not contract with expectations, but that was temporary. The labor market is pretty solid, and this in turn turns to bring solid consumer sentiment and consumer spending. For personal spending for April caused some concern by retail traders. Data from May managed to offset this one. And while U.S. consumers may be pretty optimistic, U.S. business, especially those in export-driven manufacturing sector, are having a bad time due to a strong U.S. dollar. U.S. businesses are relying on domestic demand, as you know. So these domestic demands include housing sector, and that is actually doing pretty well. As for inflation data, which is one of the main factors in basically coming up to a rate hike. They're not exactly stellar, but they're not dismal either. But that also means that the Fed doesn't really have a reason to raise interest rates based on inflation data alone. So all we have to do right now is to wait and see for another 15 minutes to get a better direction for the US dollar. In general, US economy is doing well. Oil prices are projected to be down in the next 10 years. That also means another rally, kind of rally in the US dollar, but a rate hike hint from Janet Yellen today could also help us with that one. I did do a quick introduction of Orbex and Investiva, but I'm not going to go there because we have only 30 more minutes for our webinar. I guess you saw these ones already, at least on the webinar screen. For those of you who have joined us today for the first time, I apologize for the basically technical issue that we had before. But I do see some newcomers today, and I would like to do an introduction for Forex. Forex trading basically includes trading money, giving your money in a specific currency and trading it in for another currency and vice versa. That is the reason why you're able to make money in both directions much better than you're able to make money in both directions in stock market, for example. The reason being is that when one currency strengthens, it's always strengthening against another currency. And if you short that currency and the market is going down, you're still going to be able to make money. Major currency pairs include Euro, Swiss franc, Japanese yen, Aussie dollar, Great British pound, New Zealand dollar, also known as Kiwi, and Canadian dollar, all paired up with the US dollar, which is the safe haven, so-called, of the currencies. You can trade currencies nonstop, 6 days a week. The market moves in cycles, so for long-term traders, that basically gives you an opportunity to trade any time of the day, as long as it is not a Saturday or Sunday in the US. And the only thing that we would mention to be wary of is the high leverage in the Forex market that is available to most traders, especially to those outside of the US and outside of Japan. In some countries, you're able to trade currencies with a leverage as high as 500. And that basically enables you to multiply your wins, your profits, by whatever amount of leverage that you take. But on the not very bright side, you also multiply your losses in the case of you being in a losing trade. And that is not a good thing because you can easily wipe out your trade. So definitely pay attention to leverage in your risk appetite, risk calculation before getting to the market using high leverage. All right. So in our agenda, as we said, today we're going to cover the best Forex trading sessions and Forex trading times and days for different types of traders. So I would like to first ask our attendees what type of the traders you basically are. Do we have any scalpers in the crowd? Scalping means getting in and out of the market very rapidly during an hour. Basically, every minute you get into the market, make or lose pips, you get out of the market. Do we have any scalpers? Ziad, okay, he's a scalper. Very nice. Do we have any traders who keep their trades for at least 3 to 8 hours? Yes. All right. Great. Thank you for answering. Do we have longer term traders? A long term trader in the Forex market is someone who keeps her trade for at least 3 days to a week and goes over to sometimes even 2 to 3 months. Do we have any of those kind of traders in our crowd today? Yes, thank you so much for responding. Do use your chat box to ask questions and answer our questions. I definitely would appreciate, um, sorry, any questions and answers because that will make me feel that I'm not talking to myself. All right. So happy FOMC trading day. Yes, happy FOMC trading to you, trading day to you too. All right, we have a bunch of questions over here. This, for some reason, is not showing me the full panel. Okay, so first, since we do have some short-term traders in our crowd, let's start with the best times of the day to trade Forex. And before that, I would actually do through the Forex market and the Forex trading times. So a typical trading day, the Forex market, first of all, let's say it's a Sunday night. How many people do we have here from the East Coast in New York? Only 1, 2, 3. Yeah, well, that's great. So East Coast in the US on Sunday night at around 6 p.m., that is the time that the currency market starts the trading week, right? The reason why is that that is the time that the Sydney market opens. The Sydney market in Australia includes, well, obviously Australia and New Zealand, and they are the first countries on the planet Earth that basically turn on the calendar to the next day. And that's the 6 p.m. in New York is 9 a.m. almost in Sydney. And that is the reason why, if you are in New York, if you are on the East Coast in the US, you can start trading as early as Sunday night. Yay for us, right? And the Sydney market goes on from 5 p.m. or 5 to 6 p.m. Eastern Time to the next day. So if we're talking about Sunday night at 5 p.m., it goes on to the next day at 2 a.m., right? So 2 a.m. Monday morning is the end of the trading day in Sydney. Right after the Sydney market open, the next market that opens that is very important is the Tokyo market open. Tokyo market open, obviously, we call it by the Tokyo market because it is one of the main financial markets in the in Asia. Of course, well, Singapore and China are and Hong Kong are actually competing with that, but we call it Tokyo. It's mostly known as Tokyo. That starts at 7 p.m. Eastern Time and goes all the way onto the next day at 4 a.m. So if you're an early riser, if you have kids, and if you have an infant who needs to wake up at 3 in the morning and you want to trade short term the Asian session, the Tokyo session, you can definitely do so because the Tokyo market is still open. And right before that, so this 3 a.m. is actually one of the most important times because the Asian session and the London session basically cross paths, right? So the London session is just about to open and the Tokyo session is just about to end. So if you're a trader of the British pound versus the Japanese yen or the euro versus the Japanese yen, that is a good time to be in the market for a short. You're likely to see a lot of volatility in the market during that time. But then for people in the West, that is the US and Europe, the crossover between London and New York market open is one of the most important ones. The reason why is that, well, the London market opens at 3 a.m. and it is open all the way to 12 p.m. Eastern time. And the New York market, obviously, that starts at actually 9 a.m., but the market participants start making up noise on CNBC and Bloomberg at 8 a.m. And the early movers are already out by then. So that's why the crossing from 8 to 12 is best time to trade European pairs, including British pound, Swiss franc, the Swedish krona, and all the other currencies in the Eurozone, or not in the Eurozone, in the region, versus each other and versus the US dollar. So one thing that you need to, let's actually go, I'm going to cover the different characteristics of these time zones in more detail, but you got to know that finding the best time to trade, it really depends on what type of a trader you are, again, as I said before, and what type of currency pairs you're looking to trade. We've already had a webinar on how to choose the best currency pair to trade of. I have a video about it on investivo.com that basically gives you the rundown in less than 5 minutes. So definitely check that out. It's called 8 Steps to Choose the Right Currency Pair to Trade. But so if you're a short-term trader, you want to choose the right time that your specific currency that you want to trade is the most volatile, because you know that if the market is moving sideways, you really cannot make any money. Consolidating market is not really an opportunistic market. Longer term traders, we're going to cover them as well. They should rather look for the best day to enter or exit the position, not the hours. So let's first cover the best times for short-term traders to trade during the trading day, right? So the first and foremost important point is that the currency pairs tend to show their thickest move, the highest volatility during the London session, because it crosses with two other major sessions. That it crosses with, at the beginning, it crosses with the Asian session. And as you saw over here, so we have the crossover here, and we have the crossover here. And if you are a trend trader, this is important because most short-term trends begin the beginning of London session, that is 3 a.m. Eastern time, which is 8 a.m. in London, and they die down by the time the New Yorkers wake up, right? And then we have a period of basically consolidation a lot of times, and especially from 12 p.m. to 5 p.m. in New York markets, unless we have something very important, such as the FOMC. Today, the market don't really show much movement. We have only 15 minutes to go to FOMC, so it's very exciting. It's going to actually start right after we talk. And I will definitely try to do a market walkthrough for our short in this webinar. What is going on, because this is going to be very interesting. We have any early movers. Where the euro dollar is basically consolidating, we're seeing major moves on the British pound, but this is no different than what we saw this morning. So the markets are basically consolidating. Yeah, it has been consolidating in the past for a few hours, waiting for the announcement from FOMC. So one last thing about best times of the day to trade for short-term traders is that best time to trade different currency pairs is when their respective market is operating. So if you want to trade Aussie dollar versus the New Zealand dollar, obviously the best time to trade it will not be during the New York session. The best time to trade it will be actually in the Sydney session from 5 p.m. Eastern time until whenever that you're awake. So if you're a night owl, that will be a perfect time for you to trade the currencies from the land down under, right? If you like to trade the Japanese yen versus the Australian dollar, the Japanese yen versus the New Zealand dollar, also the crossover between the Sydney market and the Tokyo market would be the best time to trade. All right, so that was it for short-term traders. Do you have any questions? Okay, long-term. I'm a long-term investor. Okay, great. When you hear these, just sell your dollar. All right, we would definitely do that. Okay, so no specific questions for short-term trading. It seems like people are very interested in knowing about long-term trading days. Here it is, simple and clear. Best days to trade long-term for long-term traders are Tuesday, Wednesday, and Thursday. I'm going to do my reason. Of course, this doesn't mean that trading on a Monday or trading on a Friday is not going to be profitable. But the reason why I'm saying that Tuesdays and Wednesdays and Thursday are the best days is because you don't want to jump in a trade right at the beginning of the trading week because the currency pairs are basically just waking up. The market participants are coming out of the weekend. They haven't been in the markets. They probably have forgotten about what has been going on. They have been miscommunicating. There are some analysts that are trying to create noise, and the market direction, especially if you're a trend trader, hasn't found its way just yet. So Monday could be a great day to trade for short-term traders, right? Especially, well, as we covered, it really doesn't matter as much because your trends are much shorter term. But for somebody who wants to be in their trading position at least 3 days, you want to wait for a clear market trend signal. The reason why we're saying Fridays can be tricky is because the weekend is just ahead. A lot of our peers are, especially if they're in the earlier forex markets such as the Asian or in London, they're already out having their happy hour beer. They're not in the market. The volatility is low, and the trends could have actually found an end. So actually, it could be a good day to get out of a market, but not a good day to get into a position. Fridays, though, are still better than Sundays and Mondays as long as you loosen up your stops and limit orders before the end of the trading week. The reason why being is because, again, on Monday, sometimes because people are coming out of the weekend, they just start the market with a kick. They go way higher or way below of where the market was previously because it's just, like a wake-up call. Like, bzz, wake up. And the market just jumps and can kick you out of your trade based on a false alarm. So it is recommended that you loosen up your stop and limit orders. This obviously applies for traders that hold their trades for several weeks as well. So one thing that you definitely need to keep in mind is that even though we covered all this and we did talk about the forex market being, alive and awake 24 hours a day, 6 days a week, you have to keep in mind that you shouldn't feel obligated to trade all these sessions because, well, first of all, you want to get some sleep. You want to be able to analyze the markets properly. And you don't want to get greedy because that will not enable you to make rational trading decisions. And you basically, the best thing, especially for long-term traders, is to pick their comfort zone, their comfort market, and look into trading those markets on a schedule. Again, I think it's very important for you guys to do check out the video about how to choose the best currency pair, because it goes very thoroughly on the best ways to find your comfort zone and avoid misconceptions in forex trading. So we are 9 minutes before the end of the webinar and also before the beginning of the FOMC press conference. So I would like to do a live market walkthrough. If you allow me, I'm going to connect my screen for a second and then show you my trading system and the charts to see what is going on in the market and if this is a good time to get into the market and a good day to get into the market. So today is Wednesday, and it does fall into one of the good days to get into the market for long-term traders. But is it a good day to trade on a short term, on a short period as well? Let's just go ahead and see. One of the markets that I would, so based on what I just said, what is the best currency to trade right now at this moment? It is almost 2 p.m. in the US. Does anybody know? Does anybody have any suggestion as to which currency pair they would like to see right now? Euro dollar. All right. Okay, we could definitely take a look at euro dollar right over here. Let me make sure that you see my screen. Okay. So the euro dollar pair on a daily basis is actually consolidating. Not much going on a daily basis, not much going on an hourly basis, and well, somewhat going on. So we're seeing right now in the past hour a bearish candlestick, which means euro dollar strength. Hold on one second. Let me actually, I think it's better to take a look at some other currencies that could be more active at this very moment. Well, considering the fact that the London session is already finished, actually, to answer the question that I just asked, yeah, the New York session is not really the best time to trade for short-term trading because the only market open is the US market. But it is also the beginning of, like, it's just before, a few hours before the Sydney market opens again. And it's a few hours after the London session has finished. So if you were to trade on a short-term basis any of these currencies, I would actually say it would be dollar CAD because Canada is actually open right now. So actually, let's take a look at dollar CAD right now and see if we have any volatility over there. Well, the market is very confused today, but we still are seeing definitely a US dollar bullish that has been crossing in all currencies. So one thing about this time, this session, which is the New York and Canada session from 12 p.m. Eastern time until 5 p.m., is that even though the other markets are closed, you can take advantage of that, for example, right now, because every other major currency basically trading versus the US dollar or the Canadian dollar is going to be dragged by the movements of the US dollar or the Canadian dollar alone. So the euro dollar, right now that we don't have really any news out from, let's actually talk about dollar Swissy or the British pound, they're not having anything really coming out of their markets at the moment. So their movements are basically based upon the news out of the American market, the US market. So that also can be a trading strategy for those who want just a bit of a volatility, but not too much, right? So right now we're looking at dollar CAD. We didn't have any market news coming out of Canada either today, so the movement of dollar CAD is also basically based on the U.S. dollar market news. So let's see if we can, for short-term traders, we can come up with a strategy. Right now, I can see a triangle because the market has been consolidating. And okay, let's go from this side actually. So this is the triangle. The market is trying to break above this level, which is basically the upper level of the triangle. Is struggling with it, the 1.23, but it does seem to be on an overall uptrend. Fibonacci here from the beginning of the downtrend to the end of it, we could actually see the market going all the way up to the 50%. Again, please keep in mind that this is the hourly Forex market, because I know that here Melissa, for example, is a long going to be confused. But the market is struggling to get to kick out of the consolidation, and within the next 15 or hour, if we do see 15 minutes or an hour, if we do see a break above this triangle, we could see up moves all the way to I wouldn't say the 15% much, because that could be too risky for a short-term trader. I would recommend to target 123 as a bullish exit strategy. So that was for dollar CAD. We're not seeing much dollar. Let's take a look at the British pound and see if we are. Ooh, this is really bullish. Even though the US dollar has been bullish, we have been getting really good news out of the UK today, and the momentum is still on. But this is actually the daily chart. All right, please excuse that. So still bullish, which is kind of interesting. This means that, especially this candlestick right here, means that the British pound is doing much better than the US dollar in terms of strength. Even though the US dollar right now is doing pretty well, the British pound has been able to combat the US dollar strength and basically push the pair up, which is a very interesting observation. So what I see over here is a struggle. I would not recommend right now in the British pound versus the US dollar, considering the volatility that is expected in a few minutes. I would wait and see for this market at the moment. Let's take a look at the Aussie dollar versus the US dollar. This one is also going up. Okay, let's see. I think this actually means, okay, yeah, the reason why is that the US dollar suddenly started going down. All right, I think the market participants have started their analysis, and the market noise has announced something. Actually, let's take a look at the news. I bet you something out or has leaked, and the U.S. dollar has started to go down suddenly. Did you see that move? This is the volatility I'm talking about. Look at this. Look at this. We just had a down market, and now the market is suddenly going up. This is it. We are going to reach our 1.23 target right here on this webinar. How exciting is this? I should have actually put a trade right here. So this is the volatility we're talking about. If you are a volatility trader and you are comfortable with your analysis, this could be your chance to get into the market. We're coming to an end to this webinar. Please let me know if you have any questions. Once again, I would like to thank you for joining us today. If you have any questions, just email at info@orbix.com or email me personally at kiana@investdiva.com. Thank you so much for joining me. Enjoy your trading during the FOMC press conference, and I will hopefully see you in the next webinar.